think gambling is always a wrong word. For investments, it's the total opposite of gambling. A gambling is you're toying with the law of probability and also toying with luck. Whereas investments, it is not about gambling. Right? Investment is making an informed decision. Right? You're not investing or trying to make money because you're just lucky, or you're just trying to because you're taking a bet. Right? Those are gambling. Investments, the concept is purely making an informed decision and making an informed investment. Right? So, if you look at it, there is no risk-free investment in the world. Every form of investments carries a certain level of risk. Right? So, it's totally impossible to have an investment that is zero risk or risk-free. Right? The only differences between investing in shares and unit trusts is, as I mentioned earlier, number one is whether are you making the decision directly, or you are actually delegating that decision to a fund manager to make the decision. Now, if you talk about most unit trusts in Malaysia, they are mainly unit trusts that invest in the share market as well. So that being said, if you invest directly in the share market, your underlying asset is shares. If you invest in unit trusts that invest in the stock market, again, the underlying are also shares. So to a certain extent, it doesn't make one less risky than the other. Right? So the only thing is that when you invest in unit trusts, probably with the huge numbers of shares being invested in the fund, that will somehow mitigate the risk, because, well, if some companies fail in the fund, it could be mitigated by other companies that are performing well. Whereas if you invest directly, say you invest in one or two companies, well, your whole fate relies on the performance of these two. Right? If it works, it works. If it fails, you lose money. Right? I think that's the only difference. So basically, I don't think that one is less riskier than the other. As I mentioned, there are no risk-free investment. Okay, the only thing an investor can do is actually mitigating or minimizing the risk. You can never eliminate risk. Okay, how do you mitigate risk is by knowing what you are investing. So the first thing that any investors need to do is that they really need to learn and to understand what they're getting themselves into. If you know exactly what you're doing, you know exactly what you're investing into, you're able to minimize the risk. Again, not to eliminate the risk. But if you just jump into the stock market, or let's put it this way, if you just jump into property investment blindly without knowing the details of the property, it's as risky as investing in the stock market. Right? So risk can only be minimized if you know what you're doing. So the first advice to beginners in the stock market is learn. Always learn about it before you jump into it.